Meet John Anderson. John is the risk manager at Sigma Enterprises, a thriving firm distinguished for its safe and successful operations. As the risk manager, John has routinely opted for traditional guaranteed cost insurance for Sigma workers' compensation, automobile, general liability, and cyber risk exposures. However, in spite of these coverage strategies being efficient risk transfer methods, John has consistently found himself frustrated due to lack of control over claims and premiums. Historically, Sigma's annual loss ratios have consistently fallen below 30%, yet the premiums never seem to mirror the success of preserving such a safe workplace. John started to think that this was the norm across all insurance providers. That was until he discovered Forza Capital Advisors. Forza Capital Advisors is an experienced consulting firm with experts in alternative insurance solutions, which allows them to lead the industry in formulating and supervising group captive insurance companies. Forza Capital Advisors' proficient team initiated a dialogue with John to consider an alternate risk financing technique known as single parent captive insurance. A single parent captive insurance program is developed and owned by the parent company, Sigma Enterprises. John had a basic understanding of captives, but always assumed they were exclusive to big corporations and that Sigma was far too small to participate in such a plan. Forza Capital Advisors extends assistance to companies that are paying as low as $500,000 and as high as $50 million annually in combined workers' compensation, automobile, general liability insurance, and cyber risk premiums. After conducting an in-depth review and actuarial analysis of Sigma's existing program, Forza Capital Advisors was able to realize significant enhancements and cost reduction via this captive option. The captive granted Sigma expanded insurance coverage, greater command over the claims handling process, and a notable reduction in annual premiums. Moreover, the captive allowed Sigma to reap 100% of the profits and investment income dollars from its new insurance program. Now, for every dollar that Sigma pays as a premium, approximately 30% is allocated to operational costs and 70% to a loss fund that earns interest, which, if not used to settle claims, will return to Sigma. An additional benefit of the captive is IRS Section 831B, which allows $2.2 million in premiums paid to the captive to be subject to 0% federal income tax rate on the captive's underwriting profits. This represents an additional profit center for Sigma. John leveraged these savings to initiate an employee safety incentive program that now enables workers to partake in the program's profitability. This approach has dramatically boosted employee productivity and morale, thereby significantly improving Sigma's bottom line. Sigma has been in their captive for 5 years now, and John and the owners could not be more pleased. During this period, their company has managed to reduce their total annual insurance cost by 40%, efficiently controlling losses and receiving hundreds of thousands of dollars in underwriting profits. Because Sigma has realized such impressive outcomes with its causality captive, it's currently exploring similar captive options that Forza Capital Advisors provides for property coverage and excess stop-loss coverage for self-insured employee medical plans. Don't let your diligent efforts and exceptional loss experience be a subsidy for competitors. Reach out to Forza Capital Advisors today and take charge of your insurance destiny.